You're watching Morning Markets on BNN Bloomberg. It's time now for Hot Picks, where we speak to an investing professional for their top conviction calls on the market. Today's focus is emerging markets with a specific interest in consumer stocks. Let's get some of these top picks outside of North America. We've got Ramiz Chelat. He is portfolio manager at Vontobel Asset Management. Thanks so much for joining us, Ramiz. I want to start with just generally, we are seeing outperformance from markets that are not just the United States, and for so long it's been USA all the way. What do you think is driving this recent outperformance, and do you think it's sustainable?
Right, thanks, Amber. So I do think that emerging markets are poised for recovery in 2023, which is different to how we see developed markets, which are heading into a slowdown/recession. If we look at some of the key emerging markets, China, you've had a significant U-turn in terms of policy. They're abandoning zero COVID policy. They're significantly stimulating the property market to resurrect it from weakness and incrementally adding the stimulus on infrastructure. In India, we've already had a very good recovery in 2022. The economy is growing at 5 to 6%. Credit growth is at very healthy levels. The consumer is at healthy levels, and we think there's structural growth in a number of sectors. And Indonesia, similar to India, you had a strong recovery off the COVID weakness, and credit growth and consumption are quite healthy. So I do think some of the key emerging markets are well poised for recovery in 2023.
All right, let's talk about one of the areas in India that you're focused on, which is the auto market. And I think in North America, we talk about your Teslas, your GM, and the race for electrification. And even that kind of bleeds into a bit of a China story. This seems to have kind of a different focus and different fundamental factors. It's Eicher Motors, tell me if I'm saying that incorrectly, in India. What's the play here?
So Eicher Motors is basically, the key business is the cruiser market. And when I talk about cruisers, if you think of Harley Davidson, Eicher Motors has the Harley Davidson equivalent in India. Their brand is called Royal Enfield. The brand's been around for over 100 years, and it has a long history. But they've resurrected that brand, 20 years ago, and created a much more affordable cruiser product for the Indian market. And increasingly, what's interesting is the global market. So when we at Vontobel, we look for high quality businesses at sensible prices. This is a business that has a very strong competitive advantage, very high return on invested capital, and a very strong runway. So India, they've doubled their distribution over the last 2 years. You're seeing a cyclical rebound in volumes, and they're launching new products off their new platform. Internationally, they're a small percentage of the pie in both developed markets and emerging markets, but they're now clearly seen as the more affordable cruiser that is an alternative to a Harley Davidson, which is 2 to 3 times the price. So we do think there's a very long runway of growth for Eicher Motors.
And I'm just looking through some of the financials. It seems to generate a ton of free cash flow. And just help us understand how you think about valuations. I'm seeing its estimated earnings. On estimated earnings, it's trading about 30 times. Is that accurate? Is that what you would consider a fair price in that market? How do you think about that?
So if you look at consensus on a 12-month forward basis, trading about 25 times. Now the question is that attractive relative to the growth? Now, if you look at the volume growth, they're growing exports at 50% in recent quarters. And as I mentioned, it's about 20% of their revenues. We think there's a very long runway. This is a 10-year story for Eicher Motors, not a 1-year story on exports. And domestically, the volumes are recovering quite strongly. They're only back to 2019 volumes right now, just because of the cyclical weakness you had through COVID in India. So we do think that the volumes still have a long way to recover in India, and they're getting good pricing growth because they're consistently premiumizing in terms of launching new models. So, if you look at, again, I'll talk about consensus expectations for earnings growth is roughly in that 20 to 25% range. And there could be upside risk to those estimates if exports continue to grow faster than expected.
All right, let's fly over to Brazil for your second pick. Raia Drogasil, it's a drugstore in Brazil. We hear a lot about political upheaval there. How does that affect, consumer behavior?
Well, look, the great thing about some of the companies in Brazil is they're growing through very weak macro in Brazil. High Drogasil has been growing at 20%, even in a GDP growth environment of 0 to 2%. So why is that? They're the leading drugstore operator in Brazil with about 15% market share. They're more than double the market share of the number 2 player. And 70% of the market in Brazil is smaller operators or mom and pop operators. So there's a significant room for consolidation in Brazil. And what they do differently versus competition is they have a much stronger logistics footprint. They have double the SKUs of the smaller operators, and they're national. So they're growing not just in their core market of São Paulo, but they're growing in the north as well as the south. And we think the headroom for growth in terms of space growth is, again, 10 years plus at 8 to 10% sort of space growth per annum. It's very difficult to find a retailer that has that sort of space growth outlook and competitive advantage. So it's well placed, even in a slower Brazil GDP growth environment.
The next name will be familiar to our viewers. It's a Chinese tech stock, Tencent. It's doubled recently, but still a shell of its former self. What do you like there?
So Tencent, if you look at 2022, it was significantly impacted, firstly on their core business, gaming. You had a situation of zero COVID policy in China really having a detrimental impact on consumption. That hit the amount of spend that consumers are willing to spend on games. And, secondly, the regulator had halted gaming approvals for over 12 months and implemented minor addiction regulation. Now, the regulatory environment, we think, is improving. So the addiction laws are now already in the numbers, and gaming approvals have resumed in the last 6 months. So Tencent is getting new games. They're going to launch more new games as we expect consumption to improve this year. And we do think that international gaming is a longer-term opportunity for them, which is about a quarter of their gaming revenues. Then the core advertising business, that is really leveraged, to a cyclical rebound in the Chinese economy. So categories like property and gaming itself, which is a big category for Tencent, were very weak in 2022. They're poised to recover. And they're launching this product called Video Accounts, which is taking market share back from Douyin, which is a leading player in live streaming.